Please subscribe, like, and hit that notification bell. Thanks, guys. All right. Welcome, everybody. It's going to be great talking charts with Dale Pinkert. It's Kevin Wadworth and I, of course. And look, we're straight into screen sharing. We're starting to talk with Dale. He's on the show. And then I said, sharing screens. And I said, stop. I'm going to record it. And let's just continue where we were, Dale, there. What, like a big day in the numbers today? And what do you
Yeah,
see right now?
the market has been headed in this direction for a while. You've had failing rallies in the 10-year too, and then if you want to get macro, which I know you guys like to do, really, this was a failing rally, right? After the peak that we had in October of 23. And, it's a classic formation. It's right out of Edwards and McGee, a descending triangle where you have a major support level descending line, and 420 is a break, a failure to me, which measures just this, taking this formation, it's 50 bips. So you're talking about 370 okay, initially for a target. I don't know how many cuts that's going to be by the Fed, but I can even open the door for 358 and even 3%. Um, all the way down here. So here's 358. If you just do equality here
Dale,
from this,
when do you have an approximate when you
and
do
yeah,
your
I
target?
think it's happening in a hurry. This fall in yields
Yeah.
is accelerating. Even the long end TLT, after trying to shake people out a
Ooh.
week ago, on the verge of another wave to the upside. So duration looks okay to me too. I could make a case for definitely over par 105, maybe 109. So yields are going to drop. And the flip side of that story is we have I believe, a major breakdown in the dollar. I've been pounding the table on this for weeks. It's taken a lot of patience. But my stops were over 106.50. I've been selling it here, and I've tweeted guys that you know what a trend line's destiny is.
To
It
be
has a
broken at some point, Dale. A trend line is destined to be broken at some point.
There you go. A trend line's destiny is to be broken. So we broke this first one, which wasn't as long term last week. This uptrend line goes back to the end of 23. So I'm looking for 102-ish on this move, and I think we're embarking on a multi-month move to the downside in the dollar. And I know a lot of people were constructive looking for this breakout. Um, that's not happening, and what's happening in the end is significant too. This is an example of things can change in a New York minute. Okay, you could have a market that's grinding, and in one day it takes out weeks worth of action and changes the whole complexion of the chart. Um, could I say that maybe something like that might happen here as in the melt up as we're grinding, and we ever have one good down day like we're having in the end? Um, be alert. So, that's an example that you always have to be on guard for what's not expected, and the magnitude after a long grind up or down is huge because you have a lot of people, there's fuel for liquidation and then possibly new positions coming in.
When I
So,
see that, Dale, whenever I see a shorter term rising trend line fail, for me, that's okay. A correction is starting. So for the US dollar and Japanese yen, um, when do you get, let's say you want to be, you just want to be bullish on it. When do you
well,
get back into this thing? When is it safe to go back long the USD Japanese yen?
a lot of people were waiting for 164. Um, the yen, of course, has, is a stronger chart than the dollar, right? Here's the yen daily, and here's the dollar daily. So, I mean, the dollar failed to take out these highs while the yen obliterated this was the last intervention high. So I think it's very possible that this is it. I don't know how we're going to recover. And
Wow.
this is most likely a reconnection to the yield correlation, which it's been disconnected from for months. So, correlations work till they don't. But if the narrative for, 370 10-year, 350 10-year turns out to manifest, that also implies that the yen has peaked. But I have more conviction about a dollar peak, and where I would get back in long the dollar is when they rename it the U.S. lira. Okay, so I really think that most likely by year end, that we're really the major breakdown is going to be at par, right? I mean, this is a range. And from this peak, all we did was rally 50%. So, we corrected the oversold condition more in time than price. So, the dollar had some opportunities while the bonds were, under pressure, and the 10-year was trying to rally to do better, and it's not doing better. Now, I don't rule out maybe a short-term bounce, but I think 102 is destiny. But I'm looking for if you're really going to be bearish a dollar, you just take this initial move up from here at, call it 115, and call it par. Okay, that's 1,500 handles. If we ever take out par, minus 15 gives you 85 for the dollar. If you want to be more conservative and you just take the range from par to 107.30, that would take you to about 93, 94. Think we're going there, guys, and that shouldn't hurt precious metals, right?
Okay, Dale, I was going to bring up precious metals next because, of course, I think everybody's noticed that gold has been moving upwards steadily along with the US dollar index for the whole of this year. We've seen strong moves in gold in 2024 from $1,800 to $2,400. So we've seen a $600 rally whilst the US dollar index has been rising through the same period. So the added impetus of a declining US dollar index, just where do you see gold going over the next, well, through the remainder of this year? And also, do you think that we are on the verge of a capital rotation? In other words, with a gold outperforming the US stock markets?
That would have to prove itself to me. I mean, I'm accumulating SQQQ calls out into December past the election. When I was talking about the bearish case for the dollar, guys, people will go, Dale, how can you be bullish on the pound, which is attacking 200-week moving averages, breaking through it because of the political instability that could occur from their election? And then how can you be long the euro with what just happened in France and Le Pen making major inroads? And my response to people that asked me that question was, there is no place on the planet that has more instability politically than the U.S. right now. Those other countries I mentioned, they were able to execute an election without it being in dispute. I didn't see any social unrest in France or in the UK, which was, historic majority, right? But here, no matter what the result, it's going to be contested. And we don't even know who's going to be at the top of the ticket for the Democrats. So I think there's going to be, a confidence crisis is also going to lend towards people wanting to diversify out of the dollar. And I think it's so important for people that live here in the U.S. to look for some kind of hedge, because every asset they own is priced in dollars. Their real estate, their stocks, their CDs, everything. So say I'm right, we get a 10% hit in the dollar, maybe 20. That needs to be hedged. That means that, You need the market to go up another 10 or 20% to compensate for the decline in purchasing power from your currency. So I know it's not easy to do to go out and buy other fiats. And most people say, you know, what's the difference? They're all fiat. They're all going down the toilet eventually. Just they'll take their turn doing it. So, you know, I think people have to, you know, convert their cash to, you know, tangibles
Eh,
or look at commodity stocks. That's something else I wanted to bring up because, you know, you guys have been looking for this in the gold for a long time. I interview a lot of guys that, you know, have been right in bullish gold for a long time, but all of you guys are still skeptical about the miners because of their underperformance for a decade or so. So, you know, that's not exactly recency bias. That's historic bias because of how things have been going for a long time. And the other day, and it's happened twice now, when China came out and said they didn't buy gold the first month, gold broke, I don't know, $38, $40. And then Monday it broke another $35. First of all, why are the Chinese saying they didn't buy any gold? So they could get a better price to buy gold? Or they're trying to be transparent in their financial transactions. I've watched them trade over the years in grains and everything, and they're very good traders. And they always put out something negative when they want to accumulate and something positive when they want to distribute. So who knows who bought that dip in gold? I've been hearing from people it's happening in Asia, not in the U.S. So anyway, that's you know the thing about China and the gold. But the miners would not give up anything. Like when gold was down Monday, let's just use a you know a standard one. And the GDX did this, okay, on Monday, Tuesday, Wednesday, Thursday.
what are your
It
red
hardly
candles?
it it hardly gave anything up. Okay, so it's acting the way in inversely the way it used to happen, where we'd have a gold rally and the shares would fade every day. Now, when gold's down, there's money flow coming into the golds. I mean, you have to be selective. I mean, this is a different looking silver chart than AG, right? So you still have to be selective about it. You know, this is an ETF, so you're probably better off doing it unless you know due diligence. But I have, you know, I know because I got out early and I've been waiting for a break to buy for months in GDX. And I mean, all we ever got was a 38% correction. We're at new highs. I'm not buying it now because, you know, it could be a 3 drive to a top formation, but I think that we could get a reversion to the mean. And there's a historical example where remember when oil took off going into the invasion? We went to 120, 130 in WTI, and it's come off a ton. But the oil shares, it's almost like a different chart. There was still money flow into oil shares because they were making money. And the same thing could happen in miners, that even when you get sell-offs in gold, that people are into the miners now because they're printing money over 2,000 gold. So time not to be as skeptical about the miners. If it gives me a break, GDX, and this is another false breakout, to 30, which looks a little more doubtful with what the dollar's doing, that's all I'd be looking for on a pullback. But don't ignore the miners in this environment.
What's
They're
your time frame though to hold the miners? Because people they always show a long-term price objective to say, oh man, look at but after that, the chart you clearly you might have enough fuel for maybe a bear market rally for the miners, like versus gold. So let's say you did say there's a breakout. Let's say you say, okay, I'm long the miners now. It's good. But what's the true less greedy target that you have for the miners, right? Because it's not, how can I say this? People confound timeframes, right? You have a daily chart defined breakout, and people extrapolate that and they apply that to a monthly defined target, and
Okay.
that's just a recipe for disaster.
I believe in geometry. I mean, that's what we're doing technically, right? We're doing math, different types of math, right? Cycles, fibs, everything. So I'd call this a valid symmetrical triangle. It's pretty textbook. And the range is, COVID lows about 16 to 44. That's 28 handles. And if this is truly breaking out here at 35 and a half, 28 gives you 73 for a target. And that's not, I don't think, unless we negate the breakup. So, I mean, this is actually a signal, right? I could adjust the line and, to where I had it. Well, this is where I had it before, against this high. So we have a breakup. And if it's negated, I would love the chance to buy it at 31. But this is a legitimate way to measure a move in the miners. Well, maybe it takes a couple years.
Okay, so
So
you're, if this breakout does not fail, you're thinking about this is going to be a 12 months hold
double,
or so, maybe
yeah,
longer,
18 months.
18 months.
I think it's the dollar isn't going to crash, but it'll be pretty pervasive decline. You're not going to get the Peter Schiff overnight. The dollar's worth 50% less
Yes.
because it's going to be
Well, yes.
an orderly but pretty vicious decline in the dollar. That can't hurt any commodities. So I would say the weak dollar yields coming down are supportive of commodity markets. And I even think that we could get rally in crude, um, which would kind of be the nail in the coffin for the consumer. Um, Mark Chandler says we've never had a recession without having a prior oil shock. So, crude's not acting bad. Here's a weekly. And, I don't think it would take a lot for, our adversaries just to cut back on supplies and get a rally.
Adversary? What adversaries?
Russia,
Oh, okay.
China, maybe, I mean, the Saudis aren't part of our pact anymore. So this is, there, uh, don't you see the world lining up against each other, Patrick?
Well, when I look at the charts, there's always political, or there's a whole bunch of stuff happening in the landscape, right? And then
Yeah.
after that, people like attributing a reason, a story to why price moves in a certain way. And I've seen how narratives are flipped to flip the price. Let's say you're on headline news. Oh, oil goes up despite the Ukraine war. Oil goes down despite the Ukraine war. For the same event, depending where the price goes, people fit a narrative. It's like astrology. Like they did this test there. They gave all the kids in class, the astrology there, like, and they read that description. Oh yeah, look, that's what's happening to me. And then they refumbled all the descriptions, like the Pisces and all that. They gave it to the same kids again. Oh yeah, this fits, this fits. We have a tendency to want things to fit. So I'm not saying the macro stuff, the macro narrative stuff is not influencing the price. I'm saying that the aggregate of all these narratives, and the ones but there's ones that you don't know, and we have to accept that we don't know all the narratives. I'll see them in the price. So I will trade the price chart, and I don't care about the narratives because they will confuse me. They will play with my psyche. They will make me not go long when there's a breakout because I'm always scared that there's a doom event happening on the corner. If, like you said, if the price is breaking out for oil,
Don't
it's
be
breaking
scared.
out. I
Don't be
don't care
scared.
why. I do
All
not
right.
care why. We should not care why price moves in a certain way. It's fun.
Well, you know what, Patrick, there's a difference between being a reporter and a forecaster. Okay, so you know, it's not news yet about oil supplies being cut back. But I like using my imagination to kind of back up what I'm seeing technically and be aware of what's going on. You know, I used to be completely a purist, but you know, I'm not saying that crude could go to 100 if it was trading down here at 70, but we've cleared a lot of moving average. I think as long as we hold $78, challenging this high and challenge this high is viable. And how that would happen, and whether you believe it or not, there are games that are played just like the Chinese saying, why would they report that they're not buying gold?
Yes, but the
What do
trend
they have
of
to gain?
gold,
Huh?
but the trend of gold was already like going up like years before all this. It could impact maybe shorter time frame. People like
Well,
feeling
okay.
narrative, but that's not what's
All right.
driving the price of gold. It's these macro capital flows, the destruction of purchasing the power of the US dollar or
Well,
whatever you're.
China's been part of that
Sure,
macro
well, exactly,
flows, all right? A very big part. In fact, the leader
but how do we know
of
that?
this whole
Like,
move.
how do we know there's no other moving parts that we're not aware of? There's an Arab sheik hedging his position. There's the US hedging, like, there's all these moving parts. I'm not an analyst. I can't spend 10,000s of hours analyzing stuff. The only way is I could read headline news. But why do I know that that is the thing that's driving the price? It's like, for me, I can't win that game. You know,
Okay. Well, here I'll give you one that you know, I anticipated this, that you know, the market might celebrate for a while, yields coming down, which they've been doing, but until they realize why they might be coming down. And here's a technical trade that might be setting up for you. I mean, we don't have a reversal week yet, but I know a lot of people want to time a melt up, and I'm not saying this is the top, but since we've been talking, NAS has faded after liking the inflation news. You know, I can't get extremely bearish after a momentum reading like this, but okay. I don't know what the news is going to be, why the market sold off here, but you know, why not wait for a key reversal
that's
if you
right.
want a top pick instead of just getting in front of it? Well, then today's your day where you could have a stop over the high of the day, especially if we close sharply lower. So, you know, I like narratives, and you know, that's what's also had me, and correlations, bearish a dollar. I mean, most people weren't bearish a dollar. And in fact, a lot of people that, you know, the obvious would be Canada. There's record net long positions, which is bearish Canada. And people said, Dale, I wouldn't be fading this. I'm looking for a breakdown eventually here too under 36. I'm surprised it's holding up today with the dollar getting hammered. But um, so to me, that didn't mean I should go with the large specs. To me, it meant that when we break down, and I don't think it's an if anymore, when you're pounding support over and over again, it weakens it. That there's fuel for liquidation for people that are long this at record levels.
I'll tell you something,
So,
Dale, that just to, listening to what Patrick was saying to you there and what you were sort of answering back around the narratives, you probably know that my career was in forecasting and dealing with statistics and the science of forecasting when it comes to, the global atmosphere. Now, the techniques for forecasting, I think a lot of people misunderstand, actually, and I think you probably do understand them, Dale, but it's around weight of evidence. So we look at these charts and we try to make conclusions from them. And of course, you can't do that in isolation. So quite rightly, you're associating different charts here. And by looking back through history, we can build a picture of what happens when certain things occur. And what I'm talking about is stock markets topping and then melting down, as they did in the 1970s and as they did in the early 2000s, twice, in fact, with drops of over 50% in all cases on the SPX. So when that happens, we can look at what happens with gold, precious metals, and commodities, and we can identify these correlations so that when it comes to what's happening today, we can look carefully for similar correlations, similar echoes from the past, and we can put these pieces together. And it's never one chart in isolation, it's always a weight of evidence case. So if you're sitting there watching this thinking, well, should I be investing in gold, silver, commodities, or should I be, piling into the stock markets? It's always a case of building that evidence picture. And when you get the evidence that something is changing, as you said a few moments ago, when trend lines are broken, either to the upside or the downside, it's telling you something. If it does it on a weekly time frame, it tells you that there's a move on the weekly time frame unfolding. If it happens on a monthly time frame or a quarterly time frame, that's actually just telling you about a trend change. So if you've got a long-lasting trend line on a monthly or a quarterly chart, and that breaks in one direction or the other, if there are other things happening in other associated charts, then you can put that evidence together, and it really then gives you confidence. And it's about confidence. When you place a trade, it's, how can I put it? Sometimes it's a coin flip. Sometimes the evidence is 50-50. Half the evidence says it's going to go up, half the evidence says it's going to go down. It's no use whatsoever. But there are times when that evidence it's more heavily weighted, isn't it? You can be more confident about it, and it's harnessing that confidence and, obviously using risk and money management protocols. But if you can harness those confidence levels, harness those points in time when something is happening. Gold, when it broke out above $2,000, classic example. Uranium now, when it's just hitting critical support lines. And what happens when it hit a critical support line yesterday? News came out of Kazakhstan that they're increasing taxes on uranium when they pull it out of the ground. So suddenly everybody says, oh, uranium went up because of this news that came out of Kazakhstan. Well, excuse me, but no, the evidence has been there for years, and the chart and the support line and the trend line was drawn on that chart 5 years ago. Price touched it, and then the news item came out as if by magic.
All right, that's a classic example, Kevin. Really.
Exactly.
And the best trades are where you're right or wrong from an inflection point.
Yes,
so when I was selling the dollar up here, my stops were above these highs, above the formation. A lot of people like this triangle for an upside breakout, and it could have happened. Then I'd be talking about 110. But that's so I was willing to challenge a market and say, okay, I think that this rally is a failing rally. I'm short, but I'm wrong over 106.50.
Yes,
same
and
thing happened.
Accepting the invalidation level is crucial, isn't it? You have to know at what point it becomes valid, and that's where the trend line is important.
So it was really a 70-80 pip risk last week, right? And already you're up, I don't know, 150, 160 points. So that is also important, not just to launch midstream where it's harder to define your risk, but try and look for trades that within a very short price span and time frame, you're going to be proven right. It's like I say, okay, Mr. Market, I've done my work. I'm putting on this trade. I know where I'm wrong. Prove me wrong. Okay. And if you can't, I know what I'm looking for should it play out. And that's the way you go into trades. If you're going into trades and you hear this, now you don't say it, but you hear it in your head, and I think we all have. And the expression is, hope this one works. Ever hear that in your head?
No.
Never.
Maybe, yeah. Well,
oh, come on. All right. Anyway, if you hear that in your head, you need to walk away.
Yeah. Well, if you have as soon as you've defined, that's what the beauty of charts is. You're able to, and anybody could choose an entry point, right? But with the charts, you're able to add, you could choose your sell stops and your profit limits in a more secure fashion, just like you did. You said, if ever the trade goes above that descending blue line, I'm out. That means the market proved me wrong, like you said. But
okay, you have fresh money here in silver. Do you just launch and get long here? And where are you wrong on your buy from here?
Right. That's right.
So what do you do?
Well, there's a whole bunch of ways. It depends. Are you using classical TA? Are you using
I mean,
trend
look,
analysis?
whatever you would use. What do you do with silver in this position? What do you do with gold? You know,
Yes,
dollar
exactly.
weakening. Should you just launch and at least there was a game plan in gold, guys. I actually thought we were going to negate. I saw this breakout, and this was a day that China said they weren't buying gold for the second month in a row. This was Monday.
It's all China's fault. It's like it's China's
Well,
fault.
I'm just bringing up the news, man. I'm not. You could move there if you want. Um, anyway, here's a couple of tests right at the breakout. So these are the kind of trades you take. You go, well, we have a breakout. It's tested it once. I think I'll buy it against the breakout and be wrong if we close under 23.5. Those are the trades. But what do you do here? I'll tell you what I'm doing. Nothing.
That's right. That's right. There's
Okay.
coiled and
So I mean,
tight. Coiled
this
and
was
tight.
a trade.
That's right.
I'm not going to
Wow.
short it up here because I didn't buy it down here. That's something else. A trading fallacy that people have, and I talked about this in the Dixie last week because on the first French election, I got out of the way and got flat for the weekend. Okay, but then that day, that Sunday night, the euro gapped up. It was this day. And I said, well, I'm recommitting here with stops under 107. I said, I don't know. The gap could hold. It didn't hold, but the euro held. And, it was a recommit from levels I got out at. I was long from better levels from 75 and 80. So I had to pay up. And that's one of the hardest things to do is to pay up. But if I had not recommitted here, and I did the same thing in the dollar, and I was able to recommit here after the weekend, 590. If I'd waited to get the price I got out of or better, which is a psychological thing, if I feel it, I know a lot of other people feel it, the market doesn't care. So you have to be able to recommit to the same position you got out of and not expect the same or better entry than you had previously.
Yeah, and also, of course,
It's hard to do.
When you're talking about trading, Dale, there's a lot of confusion around time frames and how you define what it is the time frame that you're trading in. So if you're defining a breakout and talking about a breakout, you have to define the time frame that it's on, and you also have to be aware of the higher time frame trend. Gold is in a high time frame uptrend. Okay, so the targets for that, my personal targets, have long been anywhere between around about 25.50 and about 27,800. Now, the reason for that is at that particular point, measured on the weekly time frame, the distance from moving average for gold will be getting very stretched historically. So if you look how far gold stretches from its moving averages at that price level, gold will be getting very stretched. Its technical indicators on weekly and monthly time frames are moving to the sort of levels where you could reasonably expect a significant pullback. Now, keeping a close eye on the stock market is important at this point in time, because if the stock markets begin to roll over, then there is a risk, not a certainty, but there's a risk that precious metals will get caught up in that. It depends on what is causing the stock markets to sell off at the time, whether it's some sort of liquidity driven event, whether it's a financial banking type crime, whatever it is that's causing, interest rate cuts. The market may decide it doesn't like that. And historically, by the way, interest rate cuts are very often not a good thing for the stock market. You're probably aware of that. If you look back through history, a sort of a pivot, as it's often called, a pivot from rising rates to declining rates is very often not good for the stock market. Now, gold may or may not get caught up in that, and whether it does or not depends a lot on the dynamics of what's causing it. So when we get to that sort of level where gold may be getting pretty stretched around 2700, it could even overshoot. Who knows? It could overshoot and do something crazy towards the 3000 level. But whatever price point it begins to break down at, however high it goes now, once it starts to break down on a weekly time frame, we need to be extremely careful and look at the stock markets as well. If the stock markets are looking weak, and this is probably, I'm talking late Q3 into Q4 this year probably, then that's a time when I would be personally very cautious around stock markets and precious metals. In fact, everything, so that's my personal view. It has been for years. Anyone that follows me will know that I've always looked at late 2024 as a danger period. I'm not saying something is definitely going to happen. The stock markets could just carry on powering upwards straight through the election and beyond. But until, the classic rule is that until it breaks down, until you have some positive signs of something bad happening, then just play the trend. The trend in the stock market is up. The trend in precious metals is up. The trend is your friend and all that carry on, all that kind of stuff. And it's true. It is very true. But at the same time, you do have to be aware of what history has taught us and what that suggests may be coming around the corner. But don't let that scare you out of your positions.
And be aware of in a New York minute. Here's something that is food for thought for me. So my sister, okay, guys, I'm sharing a little family business with you guys, and she's John Q. Public to me. She used to work with Parkinson's patients and teach them how to box so their tremors would become alleviated. So, she's built up a nice IRA and everything. And she says, well, Dale, this is what I'm going to do. I'm going to get out of the market in October, and then I'm going to get long again after the election. And almost everyone says clear sailing till the fall. And fall is late September or next year. And could it be that, Pat, that all you have to do is get out prior to the election, which, October, the danger period, and then get right back in after the election, and, the market's going to pull back for you and you'll be able to buy a 10% pullback? Or are they going to press these people prior to the election to force them out and then have some type of rebound going into the election? To me, that's still a question I have. I mean, there's no reason why the S&Ps, and people have been talking 6,100 for a long time, right? Have you guys heard that number? I mean, that used to be
I've heard the number, and there's something that's far more important than the nominal price of the S&P, and that is the gold to S&P ratio.
Okay.
If the gold to S&P ratio breaks out, that's all we need to know, because when that breaks out, the capital rotation has occurred, and the S&P is a dead man walking. 1970s it happened, the early 2000s it happened. Both of those.
How old were you in the 70s?
Me, I would have been about 10 years old.
Okay. All right. Well, and what were you charting back then?
Gummy bears.
All right. This is how people come up with that, that target of 61. Basically you call it the old high here, 48. It's just addition and subtraction. And the low here, 35 or something like that. Yeah, 36. So 1,200 points plus 48 gives you 6,000. I know guys talking 7 too. And you know what is interesting today? And, I've been pointing to it as a negative catalyst, but this has been frustrating bulls all year, the Russell. And also I learned from Patrick that the Russell's kind of an important chart for silver.
It is, yeah. Silver likes the Russell to do well. It's a recovery metal, silver.
Yeah, so I don't know what's happening with this chart.
Right click, reset chart view. You got it. Right click anywhere, right click, and then go reset chart view on top.
Oh, okay.
There you
go. Okay, look at that. Finally. I mean, there were guys like Tom, what's his name? I'm seeing it, Tom Lee, David Hunter, talking about the Russell doubling, before this bull market is over. I mean, you definitely, it's the first time I've seen NASDAQ down a couple hundred, and the Russell
That looks like a flag
rally up.
breakout on the
Yeah,
Russell.
Russell's up over 3%.
That could be a flag breakout on the weekly there. Look at that
Yeah,
thing. That's a
yeah,
flag breakout. But the Russell, you know what? It's a recovery index, just like silver is a recovery metal. So the Russell loves it.
interesting.
If the Russell's silver needs the Russell to go up, silver has its greatest moves going up alongside the smaller cap stocks. It just so this is very healthy for silver. You don't want the Russell breaking down right here.
Yeah,
It's not good for silver. It's not good for anybody. So that's
yeah,
Kevin, that could be a breakout right there. Goodness, look at
yeah.
that.
Good.
Wow,
And something that, you know,
that's a breakout.
people really should be aware of is when stock markets do break down and have a 50% drop, as they did in the 1970s and twice in the early 2000s. It's when the stock market begins to recover is when precious metals do their best work. So after a 50%, 60%, even 80% drop in the NASDAQ, historically, after that drop, as they begin to recover, as they go up 10%, 20%, 30%, 50%, that's when gold goes up 100%, 200%, 300%, 400%. And then when the stock market recovers its previous highs and holds above them is when the precious metals bull era is finished. That's when it's finished. It's case the capital rotation really takes hold for the stock market when it can hold its previous high. But it's that period from the big drop in the stock market to reaching its previous high, which often takes 10 years or more in the 1970s and the early 2000s, a full decade to recover its previous highs. And that's when you get the precious metals
Exponential.
Yeah, exactly.
Okay, so that's interesting. And maybe wrap it with VIX. You know, I keep waiting for one more drop in the VIX. You have to cover up the title of VIX because people give you a red card. Right? They'll throw you out of the game. So anyway, I thought it may make, but it is interesting how it's holding with successive record high after record high after record high.
Very subdued, isn't it? I've been looking at that
Yeah.
every week, and the VIX is just stuck in that range below about 13, 14, and it's fascinating how it's just
I'm buying these calls.
Yeah. Sorry?
You know what the
These
VIX is?
VIX
It's
calls.
also it's the volume. It's the SPX volume there. If you just you put on a histogram the volume of the SPX, it tracks pretty well the VIX. So the volume must be drying up.
Volume's contracting in the S&P then.
That's right.
Huh?
It's exactly that probably. So if you
So liquidity issues could really accelerate things.
It's
in the summer.
It's
like
some
August.
type of complacency, right? It's like everything's winding down. So now the market's going to decide for a new trend. Either everything breaks out and we have peak volume with peak price, or everything breaks down and then you have peak volume with bottom price, right? But it's like.
I just wanted to ask you one more question. When you were on Face, you showed a downtrend, a down channel in silver, and I was thinking about you this week. I mean, this short-term thing broke out.
Oh, yes, it did break out since we talked.
It got through that line?
Yeah. What time frame were we on when I did it there?
I don't know. It may have been weekly.
Yeah. Oh, no. Well, whatever correction we had that we talked about, that's resolved upwards there. We're out of it.
Okay. So you have long-term longs being generated by that because you said wait for that, and now you have it.
So now I think on the weekly time frame Kevin, correct me, we're long gold, long silver, long a whole bunch of stuff on the shorter time frame because all these corrections now have resolved upwards, right? Look, you see it even on your 9-day moving average. Look, if somebody doesn't know what to do with silver now, as long as it stays above that 9-day moving average, you're in an uptrend. You could start worrying about more meaningful corrections once you start losing the shorter term moving averages. But right now, you're in an uptrend, right? It's an uptrend.
The trend navigator will be picking that up, Pat. So yeah.
Good stuff, man. Dale, I hope I didn't challenge you too much there, but I love talking to you and picking your brain there and seeing because I'm always looking. It's all my shtick there with like narratives and fundamentals, but I want to keep an open mind because one day I'm going to hear an argument and say, Patrick, maybe you haven't been looking at this the good way, So
no, Patrick, you said the key words. I believe it. keep an open mind.
Yeah.
It will keep your account open. Huh?
I love it. You have all these great trading what do you call them,
What
model?
I do. Yeah.
I love
Anyway.
it. It's wisdom. It's wisdom in a digestible way.
I didn't get this silver hair for not going through things. So thanks so much for inviting me, guys.
Yeah,
It's always fun getting together with you guys.
it's a pleasure.
I really respect your work and like you guys. So both. Good seeing you again, Kevin. You guys have a good summer.
Great. Dale, do you want to tell everybody where to find your stuff before we close up?
I'm in this universe. You could find me on Face as a host of Face. And on TradeGate Hub, sponsored by a broker, we don't sell subscriptions or upsell. You want to open an account and trade through them, that's your business. But I do videos like this a few times a week and interview guys like Patrick, usually once or twice a month, maybe 4 times. And that's where you could find me, and at Forex Stop Hunter on X.
Good stuff. All right, guys.
And hiding from 104 degrees.
Yeah, it's hot.
60 miles from the coast.
Wow.
So stay cool.
No problem with that here in the UK. We're struggling to get to 70 degrees at the moment.
Oh,
so.
God, yeah, I should move there. Anyway,
Thanks, Dale.
all right, guys. Good
Bye.
hunting. See ya.
Appreciate your time. Thank you.
All right, buddy.
Please subscribe, like, and hit that notification bell. Thanks, guys.